Forte Capital Group's Innovation X Fund is very specific. They like to get in after the giant private equities in there, in between that and the IPO. So I'll just run you through the one we just did. It's Flexport, which is a $6 billion company. And they operate in 116 countries, massive logistics company. So Forte's got all the resources to analyze the deals, put the deal together, and get access. I mean, at that level, to get pre-IPO shares of, they were in Uber, Spotify, Airbnb. I mean, the biggest, best investments in the world. It's all about access, right? So instead of us trying to do it ourselves,
Welcome to another episode of Entrepreneurship Exposed with your guy Beez, where we talk about everything related to entrepreneurship with a twist of business acquisitions, right? And I can't even say the whole topic that we're talking about today. I can't say, it's like almost like a tongue twister. It's the long game versus the delay game in investing. And we're going to expose that with our guest today. I'm not even sure what that means, right? With the long game versus the delay game, but we're going to find out today. So welcome to our guest, Justin Freishtat. I got to be careful with his last name because, my first name's Bjorn and a lot of people mess it up. But do people mess up your name a lot, man?
Constantly, to the point where, I'm not even sure what it is anymore.
I understand that 100%. It's so funny because although my name is Bjorn, growing up, people call me Beyond for some reason. I just kind of went with it. I was like, yeah, okay, Beyond. Yeah. But Justin, man, hey, welcome to Entrepreneurship Exposed, brother. I'm looking forward to this conversation. Yo, tell the people more about yourself, who you are, and how you came to where you are today.
Wow. Well, it's a long story, but first of all, just glad to be here. I love talking about stuff like this with people who want to get better, that want to win. So we're all in the right place right now, which feels great. But for me growing up, I watched my dad be, he's a serial entrepreneur. So I got to see all the ups and downs. I saw him build big businesses. I saw him lose everything. So it was kind of like going through a master class of building wealth, destruction, and all that stuff, before I was an adult, which was, it's a great gift if you want to be an entrepreneur to get those lessons early on before you even start. So I feel like I got to see what's possible and also see how quickly it can be taken away from you, which, that's a great jump point for anybody because most of us have to go through that. And I'm very thankful I got to watch my dad go through it so I could, learn a little bit and avoid some of those mistakes. But, none of us are getting out of this game without getting hurt. It's just part of it. We're all going to get hurt at some point. So, you just sign up for that and keep moving forward. And
but I prefer, you have problems and no matter what you do, right?
Mm-hmm.
I prefer these problems. I don't know. These problems is like, hey, it's stressful, but I'd rather these problems than the problems I had when I was working in my corporate career.
Yeah.
And I love that you mentioned that about your father because you saw him build big businesses and then lose it all. Mm-hmm. That is what we love to talk about on here because yes, you can lose it all, but yeah, he gained it back. Did he not? Hey guys, okay, before we get to the episode, I just had to take a moment to say thank you to everybody that's been supporting Entrepreneurship Exposed. Your guy Beez here and, just having a great time having these conversations, showing you every aspect of entrepreneurship because there's a lot of things out there that are, seems like all the glitz and the glam, everything looks good, but we want to make sure that you see some of the obstacles, not things that will stop you, but just things that you need to know before you dive into this world of entrepreneurship. If you like this content, you like these videos, please just do me a favor and just make sure that you're subscribed to the channel. Make sure that you click the like button, comment on it, just tell me what you feel about each topic so I'll know how to adjust for other topics and have other guests on. And make sure that you hit the notification bell because YouTube's kind of weird like that. And if you don't have that notification bell, even if you're subscribed to me, you won't see a lot of my content. All right. So if you would like to support us, that would be the best way. Thank you so much. Now back to the episode.
You did several times.
Oh, several times. You see what I'm saying? I love that. That's the real about entrepreneurship. So keep going. Let's know more about, what you really do now and then we're gonna start getting into that delay game.
Yeah. So with my dad, we built an organic food delivery service. That was the first thing I did. I dropped out of college, just started in sales there. It was a small little company. Fast forward 12 years later, we blow it up over 10 million in annual sales and sell it to a private equity firm. And, I was looking at, okay, what am I going to do next? And that's how I ended up in the hedge fund space, which, that whole time building that business, I loved investing. I studied it more than business. I wanted to be in this space so bad. So I got the opportunity to do that, leaving that business. And it's been a ton of fun. I mean, raising capital, the hedge fund world, it's high stakes and it's exciting at all times. And, business is the ultimate sport. Not all of us are going to have the genetics to go play in the league. And I was a hockey player, got pretty far, but didn't get pro. And, this is a business. Business is where we can all go pro. So it's the right spot if you want to live a competitive life.
I love it. So, you're talking my language when you start talking about private equity and hedge funds and all. Obviously with business acquisitions, at times we may utilize private equity. I have a community where I teach mergers and acquisitions, and through it, I always talk about the different tiers, the different levels, right? So if I'm going after a $1 million company, I can get that done a variety of ways. The traditional way is the SBA 7A loan, right? This is just like buying real estate. Or I still can do my leverage buyouts where I incur debt in the business in order to pay for it, as long as there's enough cash flow to service the debt. But once you start getting into like those 10 million plus acquisitions, sure, you could do the exact same thing, an LBO, and structure the deal in a certain way that it covers, all of the debt, or covers the acquisition costs. But something that comes up now is the private equity space. Because now you could get private equity firms that will come in and buy percentage of the deal in order to help you get it done, right? So how much have you been so being in private equity as well, but how much have you been involved in full acquisitions? Like, how have you acquired directly, or are you more so managing like a GP of the private equity fund? Where exactly in the private equity space do you sit?
Yeah, so Kerns Capital, we're a 506c hedge fund, and the private equity side, we have several funds, but the private equity side is with the partnership with a much bigger fund. It's Forte Capital Group, and it's their Innovation X fund, over $1 billion under management. So our strategy, starting a hedge fund, we've raised $20 million so far. So we're very small in the space, but through building relationships with the big guys, we're an LP of a much bigger fund. So it gives us access to these giant deals. Yeah. And then it kind of goes down the ladder, right? So they're structuring the deal, they're getting the shares, and then they come to smaller funds like us, and that's how they raise all the capital. So we're kind of just raising capital from accredited investors, packaging that up into an SPV, and then we go in and hit the minimum or whatever allocation they want to give us of the deal. So that's how it would work in the private equity side for us.
Nice. Okay, team, you guys know you got to throw up some stuff on the screen for our audience, because we have audience from beginners, the novice, to the experts. So first of all, when I mentioned GP, and then when Justin mentioned LP, we're talking about limited partners and general partners. When Justin mentioned SPV, we're talking about special purpose vehicle. A lot of times people don't realize, one, I always say that the United States of America is a corporation. It's not a country. And because it's a corporation, the laws are set to benefit corporate entities. And we have to utilize those corporate entities to our benefit as well. That's the game that's being played, and that's the rules. We have to learn those rules of the game. So any type of corporate entities, that's that SPV that you would utilize when you're going to do an actual acquisition. Now, do you have, Justin, is there a specific industry or industries that you focus on, or are you just focusing on the raising of the capital, and the larger hedge firm is actually the one that is deciding where it's actually placed, which industry it's placed into?
Exactly. Yeah. So Forte Capital Group's Innovation X fund is very specific. They like to get in after the giant private equities in there, in between that and the IPO. So I'll just run you through the one we just did. It's Flexport, which is a $6 billion company. Mm-hmm. And they operate in 116 countries, massive logistics company. So Forte's got all the resources to analyze the deals, put the deal together, and get access. I mean, at that level, to get pre-IPO shares of, they were in Uber, Spotify, Airbnb. I mean, the biggest, best investments in the world, it's all about access, right? So instead of us trying to do it ourselves, we're building relationships with the people who are the best at it so that we can gain access. That's really what the game is at this level, because they don't need money. I mean, they can raise $100-500 million in 30 days if they want to. So it's really about relationships and who they want to do business with.
Oh man, Justin, you about to become my best friend, man. I love this. This is the type of conversations that, and to be honest, some people get, I guess, maybe intimidated when they hear these types of conversations. But it's important to start, getting familiar with what it is, because it also goes into your investment strategy going forward, right? Because there's so many things that you can invest in, but understanding this game, understanding these terms, understanding the strategies with private equity, with hedge funds, with all of these things, that will really change your perception and strategy on your investments overall. I think that's why we're about to get into that delay game soon too. But I really love this, man. I love this.
Yeah, and that doesn't go away, by the way. The feeling of inadequacy. I mean, these are big numbers. I'm new in the space. It's only been a year, so I'm still learning too. And you got to just be willing to be in the room where you're uncomfortable, and it's just bigger zeros, bigger. But I mean, you just got to show up and learn, and it's okay. You got to start somewhere.
Definitely. So I guess it's already time that you got to explain the difference between what is the delay game, right? Because I know the long game, and I love my investment strategy is all about the long game, right? If I'm not the day trader, right? And three major ways of creating wealth in this world is real estate, businesses, owning a business, whether you buy it or build it, and then your financial markets, your stocks, your crypto now, your Forex, whatever it may be, right? Mm-hmm. So for me, when it comes to like the financial markets, I'm doing the Warren Buffett strategy, the long game, right? Unless I'm about to learn that it's actually the delay game. I don't know, but the long game is what I'm doing. And for me, it's like, hey, stock market is dropping, recession is happening. Awesome. Let me scope up some stuff. And I know it's going to go back. It's going to go up again, maybe even higher, because we look at the history of data of the financial markets. So elaborate for us. Long game, delay game. What is this really about?
Yeah. So the delay game to me is the way that we're all taught to invest. Like the middle class mindset is basically investing and delaying your access to your investment until you're pretty much retired, you're not young anymore, and you can't really use it in the sense of your quality of life, right? So I'm not interested in the delay game. The long game is like we can make long investments, but it's so interesting to me. Our bills hit monthly. All of our expenses, what we actually need money for, is a monthly problem. And the delay game is how we're taught to invest. It doesn't help you until way down the road. So it really suppresses your quality of life. Yeah. So to me, the long game is we're still investing for the long term, but it's got to provide cash flow today so I can live my life, so I can still enjoy this while I'm young and get some life experience. So there's a balance of, fast money, medium money, long money, I guess is the way to put it. In real estate, that'd be, fast money would be wholesaling, and then maybe flipping a house is medium, and then buy and hold is your long money, right? So you want a blend of these buckets. But for me, if it's tied up in a retirement vehicle, no access till you're in your 60s, it's just, to me, not a recipe for success, because then when you get to that point, now you've got a nest egg and you need to draw down off that. And in retirement, you're going to live in complete fear, because you're probably going to live through 2 crashes before the end. Yeah. And then how are you going to draw down? How are you going to live if you're losing half your principal twice in retirement? So it's just not a recipe for comfort and peace of mind, I guess you could say.
I love that. I never put a term to it before, but I agree, because I worked at Microsoft, and I remember when I left Microsoft before I became a full-time investor. And there we go. Someone in the audience, Miss Tiffany, she's actually part of our BBI community. She mentioned like 401ks. When I left Microsoft, and I was like, okay, I'm going full in as an investor and as an entrepreneur. And I cashed out my 401k, and everybody was like, don't do that. No. But I don't know. I think I've made 1,000 to 3,000 times what was in it since then, since those years ago.
Right.
I used it I needed it now for, I didn't cash out and go buy, I don't know, a new car or something. I bought things, I invested in things that were going to give me a return using the long game. So I ended my delay game strategy and then said, no, let's go with the long game. Now, but is it because of your father? But how did you really identify that and say, because that's not something that most people are easily, able to do. We're kind of taught by the school system in here that, go to school, get a job, stay there 40 years, and then get 40% of your pay. That's what you retire on, and play that delay game. So how did you break out of that mold and get into the long game?
I'm very observant, right? And if I see something that doesn't make sense to me, isn't working for most people, I just go look for other answers, other solutions. And I watched, my grandfather go through 2008. He did it the traditional way, never made a lot of money, saved it, retirement, got a couple $1 million in a nest egg, which is wonderful. But he experienced those ups and downs, and I just didn't want to go through that. So same thing with my dad. Like he bought that. And there's nothing wrong with this. These are very responsible decisions, but there's just another level, right? Exactly. So I was just looking for answers, and I kept reading books, and I was reading about real estate and cash flow, and if we can get growth and cash flow and depreciation and get paid 4 times on a dollar, why am I going to stick it in a 401k? It just didn't make any sense to me. So I really got my mind wrapped around real estate first, and then read a book called The Lifestyle Investor.
I know that
Great
one.
book. It's all about cash flow. It's all about return of capital.
Yes. People say cash is king. Then I used to hear people say credit is king, but no, cash flow is king. We want that cash that's continuously coming in. So I love that. Keep going though.
Yeah. Return of capital is the most underrated piece of investing there is, because now you're compressing time. If I can throw money into a syndication where I don't have to do anything except wire the money and let the operators handle the deal, and then 2, 3, 4 years into it, they're doing a refinance and I get my money back, but I'm still making cash flow on the original principal. I still got equity that's going to pay me when there's a liquidity event at some point. Yes. Now I'm on an infinite return. And this is the kind of stuff, if you really want to build wealth, you're going to have to compress time, multiply the same dollars in these creative ways. So if you just stick it in a retirement vehicle, no matter what it's invested in, it's not going to be the same.
Bro, I swear I'm smiling like cheek to cheek, like ear to ear, because this has to be one of my favorite conversations so far. And we're only like 16 minutes into it. I just love it because this is a high level conversation. This is how people should be approaching their investment strategies. And so you did this in real estate, and it's the exact same in business acquisitions, right? Because it's the same thing. We're looking for cash flow. I go into an acquisition and I'm saying, okay, well, how much cash flow can I get from this? How much do I want to pay myself from it? On what period of time, what frequency? And then not only is it cash flowing, but it's also appreciating, like how real estate would do. And I get to control that appreciation a little bit more, right? Because I get to say, okay, how are we going to scale this? All right. I don't have to wait for real estate to just, slowly grow up in prices. I'm going to say, hey, let me acquire another one of company in the vertical or the horizontal and roll it into this umbrella. And now the valuation of the overall company has doubled or something along those lines. So what are your thoughts between real estate? I know I'm putting you on the spot there because our real estate friends are going to be like, hey, whatever. But what are your thoughts between real estate and business acquisitions? What do you think gives you better returns?
I think it's the individual's acumen and which is better suited for that individual. I don't think there's a right or wrong answer there. And that's back to the self-awareness.
He's giving a politically correct answer. But
it's just the truth, right? Because let's be honest, that's your specialty. I've never done that. I've never bought businesses and evaluated them, grown them like that. I would probably do worse in that than real estate. So, because real estate's what I understand. It's what I know and like. So I think everybody's...
I think you do good in it, man. It's the same concepts. So when I found out that in real estate, you could also get like seller financing and just delay your the money coming out of your pocket to pay the seller. That's exactly what I do when it comes to business acquisition. That's one of the ways I stack the deal, right? So all the concepts and everything from real estate, and they apply right over to business acquisition. So remember those three major ways of creating wealth. We got to try to do all three of them if possible. But yes, you're right. You kind of specialize in one a little bit more and that type of thing.
Yeah. And I mean, putting deals together, I mean, if I wanted to go that route and start doing that, I would get with somebody like you and be like, coach me, I'd pay for coaching before I go and do that and learn, how it works first.
Definitely. What do you like to do? Let's say more like, what are you passionate about right now?
Right now, man, passionate about this hedge fund. I really am, just because it's a new space and I spent 10 years doing one thing, building one business. And, I'm like re-identifying and figuring out who I am. And that's why, when you need to make a big change, like I just decided I'm moving across the country. I'm starting in a new city, new identity, just totally reinventing myself. So I'm really, really diving into that. And, I spent a ton of time over the years reading books, podcasts, obsessively learning, trying to figure it out. And then now I got to figure it out in terms of I have the vehicle that's going to take me to where I want to go. So now it's like, okay, I'm going to shut off the learning and go all in on execution, because you got to have these different phases in your life.
Yes. Thank you. That's the most important aspect. You could absorb information all day, but if you don't actually execute, you don't get that firsthand experience and you don't move the needle, right? You got to take that first step and it all starts with that execution. I love it. I heard though that you're interested into like health as well, like fitness or something along those lines. Is that the case?
Yeah, I mean, we had an organic food company, so I was really deep in the nutrition, but not in the sense of what a nutritionist learns in school. For me, it was more so of the origin of your food and how the different types of breeding of animals and the farming changes the actual nutrition that ends up on the table. So that was our role, was sourcing the highest quality products, delivering it to our customers, vacuum sealed, portion controlled, right? So if somebody wanted 4 ounce, 6 ounce, 8 ounce, we custom cut and pack the whole thing. And, through that process, we built a lot of partnerships with dietitians, trainers, chiropractors, gym owners. That's where we got all of our leads from, were other health and wellness professionals. So
really?
I saw all the programs that are out there, all the different ways to achieve a body transformation. And I, over the years, I took every little piece of everything I heard from all these amazing people and built it into my own thing. And I'm obsessed with the biohacking side of things, from cold plunging. Follow Gary Brecka and 10X Health. I mean, PEMF mats, ground getting charge out of you. There's so much you can do to enhance your longevity and how sharp you are on a day-to-day basis. But I'm obsessed with working out. I got to do it every day. Even if I'm sore, I'm just going to go through the motions and just get my blood pumping, because there's just no other feeling like it. So
thank you. Agree again, like kindred spirits right here, man. I love it, because that's the same thing with me. And especially when it comes to the biohacking, because what people don't understand a lot of times is that you go to a doctor and they tell you, hey, yeah, take this, take that. But everybody's unique. Everybody's body is unique. And you really got to figure out what works best for you. Are you familiar with this?
Is that the Oura Ring?
Yes, it is. I knew you would. I knew you would know it. So even simple things like this, the Oura Ring, this gives me so much insights into my sleep, into, I wear my Apple Watch all the time. It's giving me insight.
Into sleep?
Pardon me?
8 sleep?
Yeah. So, don't let us get started right now on that, because that will take us on a whole different path. But exactly, that's what I mean. Those are the type of things that are critical for us, as investors, as entrepreneurs. One of my favorite quotes again is, we often sacrifice our health to obtain our wealth, and then we have to spend all our wealth to get our health back.
Wow.
We don't want that, right? So we got to keep that focus. It keeps us energized. It keeps the blood flowing, like you said, and it keeps our mind sharp, right? So it helps you to decide on your investments and all your strategies, and to weather the storm when things go bad, right? So you got to be healthy for it, for sure. Yeah, there we go. Britt said biohacking, speaking her language. She's a neuroscientist, so she loves that stuff as well, too. Now, so if you like health and wellness, and you're an investor in real estate, and you may want to maybe acquire a business too, let's throw up a gift for Justin right now. Let's see what we got for him. If there's something that we can, show him really quick that he might be interested in. Let's get that up on the screen, team. Let's see what we got. Hold on. Let's make sure that they are rolling with it. Where is it? You're going to like this one, man. There's a little gift for you. We just got to get it up on the screen. They're having some technical difficulties. All right, that's going to come in a second. There they go. Just a sec. All right, it's coming in a second. As soon as it comes. But I like I said, I have to see more about you and what you really are into. And then I said, okay, you might be interested in something like this. Now, I have a whole deal team in one of my companies called Capital Beez. And the deal team, we focus on first figuring out a person's true acquisition criteria, right? Because there's so many businesses to acquire that it's kind of like being a kid in a candy shop. You're just like, I want that, I want that, I want that. But you have to really be able to, separate it out and say, okay, no, let me focus on what my true goals are. And that's why we decided to say, okay, let's look at what your interests are and where you're located and see if here's something you might be interested in acquiring. And this is just a gift to you that we're going to just give you the information on. I'll pass along the contact information for the seller, the broker, etc. Or I could also help you to actually get it done. What do you think about a pharmacy? Would that align with your passions with health and wellness?
I would say probably not.
Probably not. Oh, okay. Tell us why.
Well, I mean, yes and no, right? Like we need pharmacies, we need modern medicine, but my whole goal is to not need the pharmacy, There
you go. Now, what if it was like a sports recreational facility, gyms, things like that? Would that more align with your interests?
It would.
All right, so we got one of those for you too, right? I don't think we have the flyer for it yet, but now I know which one is more passionate. It'll be more passionate.
I like the numbers that are up there, though.
Let's zoom in a little bit on that team. So this one is lower market, but we're asking about 2.9. They're profiting, their cash flow. Now, a lot of times people mistake the term cash flow and SDE or EBITDA. It's not exactly the same things, but overall, they're typically close to each other. And so that's the overall profit in there. They're grossing 6.4, which is good because then you could leverage it to get more. 6 employees, I prefer, it has to be a minimum over 5 because I don't want to work in it. But I prefer closer to 10 and higher. Comes with inventory. Scroll over a little bit. All right, comes with $750,000 in inventory included in that price. Now, I haven't done actual valuation on it for you yet, but I just wanted to present it to show you the types of things that are out there, everything you can think of when it comes to business acquisitions. Now, how does this fit? So we can take that down off the screen. I'm going to send you all of this information plus the sports facility one that we mentioned. And then, hopefully it's something you might be interested in. But how would something like that, how does the business acquisition fit into the long game versus the delay game as well?
It's just like a piece of real estate, like you said. If it cash flows, then I'm interested. It's just cash flow is lifestyle. Cash flow is comfort. It's without it, if you're relying off of one main income stream, you're one piece of tragedy away from losing everything. So that's what we're trying to avoid here by getting good at business and investing is to secure the bag for our family. If something bad goes, we can take time off if we need to, and the cash still comes in. These are the types of freedoms that we're trying to build in for ourselves. Multiple
streams of revenue. Even if you stay in your 9 to 5, that's your decision. You love your career, but still have other streams of revenue that's coming and paying you when you never know what could happen and the rug is pulled from your feet in your 9 to 5. Now, I think it's time that we go into pop. We have to pop what it really means to play the long game instead of the delay game. Now, could you explain to the audience more, like, what are the pros of if you choose to do the long game versus the delay game? What are the pros that you of doing so overall?
So there's a lot, right? And it depends how you structure things. The way that I structure, I have 2 main buckets, right? So I've got the hedge fund income, personal account there, plus active income. And the real estate is not what you would think, right? I'm investing in it for the returns, but that's not the main reason why I'm investing in the real estate. I'm investing in it for the tax benefits, the depreciation, the cost segregation, right? So if I put 100 grand in a deal in year one, $50,000 to $60,000 is a paper loss that goes against my hedge fund gains. So it's not necessarily your return on investment. It's how much you keep of your return on investment. So that's why you're building these buckets together, right? It's great to make a lot of money, but if you got to give half of it away, you didn't make that much money. So strategically building your investments so that they work together to maximize the returns, that's the whole game.
I love that. That is, and you know what? I never pretend to be a real estate expert. I stay in my lane too, but I just dabble on the real estate side. But I learned that in the last few years of exactly what you just mentioned. I was looking, matter of fact, just right now, I'm looking at a deal that includes a private island. But the private island, the real estate takes up the bulk of the acquisition costs. And then from my business perspective, I'm like, yeah, but look at the amount of the EBITDA and the profit in the business. It's gonna be kind of crazy trying to pay off that debt. You know, we'd have to stretch it out significantly. But then I always remember that but you could use the real estate to deduct on taxes, and then that balances out. Is exactly what you're saying, and it makes sense. And that's why those three major ways of creating wealth, they go hand in hand. They help each other out. That's why you have to diversify your portfolio overall. I love it. I love it. Man.
And it really helps if you are going to own a business to own the real estate underneath of the business.
And that's what's coming. That's what I've been seeing a lot, because I focus on, so you always want to look for motivated sellers, just like how you would in real estate. But my favorite motivated sellers are the baby boomers. All of them are retiring this decade. Of the 50 million of them, like 12.5 million of them have businesses, and 80 to 90% or more have no succession plan, and their kids don't want it. So then they're just like, I don't know what's going to happen. And there's not enough people that know that they can or how to acquire the business. So now we're able to swoop in and pick it up ourselves. So I love that. Now, because they're baby boomers, they probably had their business for, 20, 30, 40 years or more. And the real estate's paid off. So more and more deals that I'm seeing now, not only am I getting the cash flow in business, but it's coming with real estate too, which I'm going to use Justin's strategy to then help balance against the deductions that we would get on the tax benefits and such. So I love it. This is perfect.
Yeah, there's just so much you can do. Like when we sold our business, you got a big tax bill when you sell a business, but there's a lot of ways around it. We kept the real estate underneath the business and just spent a lot of money on the real estate, right? Like doing a solar project on top. All that CapEx is also coming off your taxes. So you just add a bunch of value to the property. You get to write off what it costs. And then you get to go to the bank and do a refinance at the new valuation and grab that money back tax-free.
I wish Coach Big Joe, who's a member of my community, I wish he was on here. He would love to hear this conversation, because that's his specialty too. He acquired a college, and I teach that I focus on acquiring cash flowing businesses, right? That's not the only method of acquisition. For example, I don't like acquiring franchises, but I know tons of people who became millionaires and billionaires off of franchises, right? Mm-hmm. But he acquired something that was a distressed business. He acquired a college that was failing because it didn't adapt. It didn't adapt well during COVID to go online courses and things like that. And I was like, Joe, why would you do that? He's like, because I know the assets that they got in the real estate. They got a solar farm and they got this and that. And he was like, okay, I'm gonna use that real estate. And now I was like, oh, you taught me something. So definitely, I love this. All right, okay, so let's go into the opportunities, right? What are some of the things that's happening in the world, in this country, whatever it may be, opportunities that exist or are coming up, why you definitely want to make sure you're playing the long game instead of the late game?
Yeah, in our space, the biggest opportunity I see right now is around AI. In our trading funds, we use AI-driven algorithms to trade currencies, commodities, things like that. And if you got a good algo, you can really make outsized returns that beat the benchmark, right? So that's the foundation of our main trading fund, is using these types of products and innovations to beat the market, and it's working beautifully.
Oh, okay. Now you have to elaborate a little bit on that for me, because it makes perfect sense. But so you're creating a proprietary algorithm utilizing AI in order to improve your investment returns.
Yeah, there's lots of ways to do this, but what I'm talking about is latency trading, in terms of, like, when you submit a market order to a brokerage, someone has to buy it. It takes some time to fill the order, right? And we're talking a matter of seconds. But if your AI and your algo is faster than the brokerage, you can predictively see where a currency pairing or a commodity to a currency pairing is going to lean. And then with pretty high accuracy, you can place high frequency trades, where you're in and out on that predictability. It's called arbitrage. And, like, use some leverage, tight stop losses and gaps, and you're in and out of these trades. You only trade a couple hours in the morning and then you're back in cash. What's great about that is you're not exposed to geopolitical events, overnight market chaos. So you hit the target, you get out, and then, that'd be one piece of the fund. And then for diversification, doing other strategies, different brokerages, different places, different firms that are implementing their strategies, and you add it all together in a trading fund, and we got a 20 to 30% annual target.
Justin, thank you, bro. I love this. Thank you. I have to invite you at this very moment to come and speak to my community one day. We meet weekly. Oh, I want to expand on that specific topic, but so much more. So thank you. This is awesome. I love it. But we got to get to the most important part, the problems. What is it that you may face? The problems you may face doesn't mean you don't go down the route, but we need to know these things before we really focus on that long game versus the delay game.
Yeah, there's problems for sure. Especially when we're talking about the private placement space, and any type of accredited investing in 506Cs, the risk is high. It is. You can lose all your money in any of these things, the real estate, our fund, and it is the true Shark Tank. It's easy to get scammed. There's all kinds of problems. So due diligence, obviously, you can do all the due diligence in the world and still lose. So the problems come into, well, I'll tell you how we solve some of these problems. Third party reporting, for everyone that's listening to this is the most important thing when you go and vet any investment, in my opinion, is, do they have third party reporting in place? Do they have an administrator that's not part of the fund, right? Because if the fund does their own reporting, that means I can falsify things. I can send you anything, and you got to take my word for it. So I don't feel comfortable with those situations. So like at Kerns Capital, we use the Boulder Group. They send our investors a report every month. They handle wires in and out. They do all the compliance, and it separates the fund managers from the money, which is really important as far as keeping the investment safe for the investors, as safe as you possibly can, because these are high risk strategies. Things can go wrong. It's just, it's part of the game. So, anybody coming in, I just tell them, look, I'm not an investment advisor. I can't tell you what to do, how much to put in, any of this stuff, but be responsible with what an allocation percentage is, where if this does go bad, you're okay with losing this money, because it can happen. And everybody needs to know that going in.
That is a powerful problem, yet it doesn't stop us. It's just a matter of how we approach our investments. And, we're doing our due diligence in every single case. But from the business aspect, when we're acquiring a business, I love to have obviously audited financials, right? Now, if you're going on a smaller scale and you're getting a mom and pop shop, most likely they didn't have some sort of audited financials, but at least the CPA that they use to file their taxes and confirms that they've, reviewed the information and it's accurate to a certain extent, at least things like that. But then I love to look at data as well, right? So I'm going to look at, what's currently happening and what's the trends right now, their P&Ls and their bank statements, et cetera. But I'm going back far as well. How did they survive 2008 recession? And that's why I go for those older businesses, because it has enough data for me to look at and make at least the most educated decision that I can and reduce my risk as much as possible. But there's still always an element of risk, no matter what. I love this. I love this, man. Now, wow, that's a powerful problem. And you gave solutions on how to navigate around and how to mitigate that risk. Is there anything else that you would say to the audience overall on what they can do to get into that long game right away and to stop that delay game? Would you, and I know you may not want to officially say this, but would you also advocate for people to do like what we did, where we were like, hey, I'm cashing out that 401k and I'm gonna focus on an investment that's actually gonna give me return? I know you may not want to fully, officially recommend it, but what are your thoughts?
Yeah, I do recommend it if you've got a path that's better, right? So that was the calculation for me. Is I knew we were getting 3 to 6% a month in the fund last year, right? So it was an easy decision to pay a 10% penalty and get it back in 2-3 months. And then it's house money, right? So if you see an opportunity that's going to give you more than 10% annually, pay the penalty, get your money out, and welcome to the real world of investing. You just got to decide what type of investor you want to be.
There we go. You heard it here first. Listen, I got something that I ask a lot of my guests, but I already know the answer for you. So I'll just go through the motion, right? I have a challenge that I'm putting out to, just out into the ether to everybody. And this is not no Instagram Tide Pod challenge or something like that. It's called the $1 Trillion Table Challenge. Now, I want to sit at the end of this decade. I think that's a realistic period of time. End of this decade, I want to sit in a room. I want to sit at a table with investors like us. And we have $1 trillion AUM. Now, a lot of times people feel that, well, first of all, they feel like $1 trillion, that's insane. No, I'm not talking about $1 trillion cash in my pocket. I'm saying AUM. My portfolio of businesses that I own, my portfolio of real estate that I own will equal to X amount. And then I'm going to sit at a table with 100, 1,000, however many other people where we're all focused on our AUM. Will you be at that table with me?
You better believe it.
I already knew the answer, man. I mean, you're already in the space that can get you there. And that's the key that people have to understand is, yeah, you could say it. You could say, yeah, I want to do that. But what are you doing to actually get there? And there's only certain things that can get you to that type of level. And definitely real estate, definitely business, whether you own or build it, and definitely the financial markets. Would you say there's anything else that can really give that type of wealth, help create that type of wealth?
Yeah, there's tons of things. And this has kind of been my philosophy with it is I want a lot of high risk plays, but a responsible allocation of them, right?
Ooh,
so, the first time I just did my first oil deal, right?
Really?
Yeah, it's new space. The numbers look great, but I didn't really know what I was doing. So I went in with a very small amount to start, right? So I think you should test these things and then go deeper. Like, just don't put it all in one place. It's just, I think it's irresponsible, right? Because we can't afford negative compounding in our portfolio, right? That's why the stock market doesn't work for me, is because I know we're getting a 30, 40, 50% drawdown every 10 years or so, maybe multiple times. And to come back from that, it's catastrophic to the portfolio. So, I'd rather have 10 high risk plays with 10% of the portfolio, knowing that 2 of them might blow up, but the net benefit, we're going to be up hundreds of percent versus the alternate route. So that's what happened in this oil deal. Out the gate, fire. The cash flow is like 7-8% a month, right? Great numbers, but there's risks, right? There was an explosion on a field next door, which completely interrupted the investment. Now there's been no cash flow for 3 months, right? So you got to be prepared for these things, and it's gonna happen. But I would still rather play in these high risk spaces. And now I got, a bunch of real estate. I feel real comfortable with that, but I need to find other things to put in this mix. Maybe the next thing is learning how to do these M&A deals with you, like that could be the next thing, but plant these seeds. Don't get too emotionally involved in any one investment, no matter how much you love it. Be responsible, have discipline, I'm not going over 10% in any one thing. It's just because I already assume going in, I could lose it. So I'm not comfortable with losing more than 10% of my portfolio on one deal.
Oh man, you have, I mean, this is amazing. This is amazing. And even in your closing statements right there, where you said, no, I don't want to go more than 10% in any investment with the potential of losing across my portfolio. Or you said, I like to play the high risk game because of those returns. Or, everything that you said right now is just amazing investment advice. And for you to say that, you're new to the space, bro, I look forward to seeing you 10 years from now, because you're on the right path, man, and you're doing amazing things. And I'm happy to have you as a guest on Entrepreneurship Exposed, for sure.
Thank you. It's been a lot of fun. Thanks for having me here.
Definitely. Well, stay tuned. We're going to talk backstage a little bit too. But everybody, first of all, Justin, how can people get in touch with you? Is there, maybe be part of your fund, anything along those lines? What's the best way to get in touch with you?
Yeah, we're getting ready to launch Fund 3 in August. So it's a great time to get involved. If you're an accredited investor, let me know. But yeah, you can find me on all the social medias. My website is toptierhuman.com. And the website for Kerns Capital is kerns.capital. No .com on the back of that, just kerns.capital. And we're all over all the socials too.
I love it. We'll make sure we put all that information down in the description as well. But Justin, man, thank you so much for being a guest on Entrepreneurship Exposed. Thank you for giving such insightful, direct, and honest information to our audience. And I look forward to seeing, having you in the BBI to come and speak. I look forward to doing some M&A deals with you for sure. And I look forward to just continuing to build the relationship overall, because like you said, it's all about relationships. It's all about networking. And that's how we continue to build to greater and greater levels. So thank you very much.
My pleasure. Love it.
All right, everybody, you know what time it is. It's the end of this episode, but make sure you don't miss information and conversations like this. You have to subscribe. You have to like. You have to comment. Share your thoughts and your insight. Turn on the notification bell on YouTube. Share this with other people so that you don't miss information like this. And then you too can be playing the long game instead of the late game. It's like a tongue twister. I don't know. All right, I'll see you guys on the next episode. Let's go. It's your guy Beez, and we are out.